Very good morning. Hope everyone is well, and very sunny day this morning, so I hope you're feeling pumped for the day ahead. We've got US CPI, so hopefully going to be a much more interesting session than what we had generally yesterday, which was relatively quiet, but I'll talk you through expectations for that. A couple of updates going from Trump through to a few things on Brexit. Obviously there was a fairly meaningful move in the pound that we saw yesterday, so we'll have a bit of a review on that as well. And then Sam is back in the office, so he'll jump on and he'll have a look at the charts as well from a bit more of a technical standpoint. So first of all, just looking at the broader sentiment for this morning, and things are pretty much similar to yesterday in a sense that because today's inflation data, namely CPI, which we're going to get, don't forget, with the time change at 12:30 London time, not 1:30, that data is really important to shape people's expectations for what they expect the Fed to deliver come next week when we know that they're hiking interest rates. What we want to know then is their confidence about inflation projections going forward, and does that then change the shape of the rate trajectory going forward, i.e. this idea of 3 or possibly 4 rate hikes, so on and so forth. So the wage data, obviously we saw as a key component of that non-farm payrolls report on Friday, obviously has lessened this prospect from where we were about 5 weeks ago when the market had that kind of short-term panic and equity market correction, but the wage data kind of failed to live up to the hype that we did in a previous payroll. So all eyes now on CPI and whether that can live up to the mark. So this morning things are fairly quiet because what you tend to see ahead of a big data point like that, because the market is very focused on that one event, very few participants are really too willing to step into the market ahead of the fray. And likelihood they'll wait until after the number is released to then trade accordingly, as then you'll probably see the volumes and markets pick up pace a little bit. So we're pretty flat in the major pairs. The dollar a touch higher. We're at the 90 level in the dollar index. You can see euro dollar top left has had a little push on pivot, which was holding up some of the support overnight in the Asia Pac session, as you can see here. We did run lower momentarily, but we've really failed to sustain that move. So just fitting into kind of the point I was just making about kind of less committed to market direction, just given that big event looming. Cable likewise, but cable obviously was a little bit of an outperformer yesterday. Kind of late, I guess, morning, we had that pretty decent move to the upside, which was really here. And so just reviewing what exactly the reasoning was behind that for any of those who weren't around yesterday. And this was the headline that broke. It was British negotiators are closing in on Brexit transition period deal. Now obviously this is the hot topic at the moment because next week is not only important for the Fed, at the end of next week, that's when we get that really key EU summit where Britain's going to be looking to secure their transitional deal. Which is absolutely imperative before corporates have speculated or at least communicated that they're going to enaction their kind of contingency plans then. And this is particularly prevalent for the financial services sector and potential movements across into mainland Europe if a deal or clarity is not obtained come that meeting. So the details here were that the Brexit negotiators are closing in on securing a deal on that transitional period and have surprised the European Union counterparts with their strong will to strike an agreement to effectively prolong Britain's membership of the single market and customs union for about 2 years after March 29th, 2019. The one thing that didn't come out of this yesterday was absolutely no details. So I don't know, for me, maybe a little bit of a kind of management, if you like, of sentiment on behalf of the British government to try and communicate some degree of confidence going into these talks, because just this morning you've had EU's Juncker said it is now time to translate speeches into treaties on Brexit. He said we need clarity from the UK government and Brexit speeches have got to be translated into details. So as much as upbeat as the UK was sounding yesterday, Europe failing, at least at this point, to show the same kind of positivity in the development of those talks. So it's still a situation that needs to be monitored very closely, and something I've been saying for a while is that the frequency of these headlines and I guess the kind of toing and froing of them being positive to negative in developments, I'd say, is probably likely to increase in terms of frequency, and it's something you've just got to be aware of when you're contemplating any kind of sterling strategy. I would say probably, definitely as we go into next week, the closer we get to that meeting, I'd probably be wanting to shorten the time frames of any open position of risk in the pound, because it could be subject to a one-off headline coming out and moving the price quite meaningfully and creating quite short-term volatility that could stop you out quite aggressively. So that's the kind of Brexit situation. Otherwise, in equity markets, again, pretty quiet. I mean, if we look at the S&P and the type of price movement that we had yesterday, it's pretty similar. And the main point here is that the market has held on to the bulk of that really impressive rally that we had. Obviously, we've still got identified here the release of non-farm payrolls, the fact that that wage data disappointed irrespective of the high level of job creation on the change in non-farms in itself. Although we pull back, I would say this kind of move that we had drifting south yesterday was really just a bit of profit taking, and the main point is that the bulk of that move, we were trading around 2740, we're still up around a 2800 handle at the moment, so it's still markedly higher. Now, looking at this on a longer time frame, I just had this chart still kind of marked up from some previous discussions. So, the one thing to be aware of is that with all this talk of policy tightening going on, we're still not that far from all-time highs, which we were trading, don't forget, it was only a couple of weeks ago, back in kind of the latter part of January. And obviously we've taken back that whole move and episode that we saw of downside movement that occurred back at the beginning of February. Looking where we are at the moment, you can see again, we've kind of found this area of consolidation on this recent move around that 2800 handle, and pretty similar to the kind of price levels that we were seeing back on the 26th, late February. So again, the market here consolidating because it's waiting for its next kind of pivot point on the US economic data coming out this week, and particularly that's today's inflation data. If today's inflation data disappoints, I would be expecting a retest of that previous high, so up here at 0.5 and a quarter, and then kind of the next levels of significance, this 14 and a quarter, that previous support points pre that non-farms in the prior month, and that resistance level back in mid part of January. I don't think they would get quite that high in one day move, but that's definitely the upside levels you'd be looking for, because then this kind of whole forward thinking about aggressive policy tightening really is going to have to be revalued or reinterpreted in that sense, and therefore that would be an equity positive for the time being at least. Alright, a few other headlines, and I'll leave the chart kind of assessments technically to Sam, and this is one of the headlines you might have caught last night. Some of you may not know who this is, but Conservative commentator Larry Kudlow has emerged as a strong contender to succeed Gary Cohn as President Trump's top economic advisor. So obviously we're in a situation now where Gary Cohn, as you remember, that was a momentary sell-off in the markets because he was seen as the most market-friendly, as the press were kind of terming the only adult in the room who we kind of took confidence from that he would make the right kind of economic decisions. He's now gone, so who's going to replace him is quite a pivotal role within the administration. Now, it's not just Kudlow, there is also Chris Liddell, a former executive at Microsoft and General Motors, is also under consideration. Liddell has earned respect at the White House for his work on projects like information technology modernization and electronic healthcare records, which required intensive coordination across different agency departments. So it's not a complete done deal yet. To give you a bit of background context in terms of Mr. Kudlow, he started off his career as a New York Fed junior economist. That was kind of his first role in finance. He then served as part of the Reagan administration in the budget department in the 1980s. He's then spent several years running in regard to politics for the Senate. He was, when Trump initially won the kind of position in the White House as the president, he was considered for the top economic job, but he was of the belief of a free trade kind of stance, which kind of put him out of the position at that point in time. But going back, this was late 2016. And now obviously he's become a contender. Now Gary Cohn has stepped aside. Just a bit of tongue-in-cheek, but Vas has asked me to also, he's brought to my attention, he's been scrolling through the New York Times archives, and he's managed to find, there's a couple of people talking about this online as a typical kind of Trumpism of the type of quality of candidates that he puts forward for his top advisory team. So this is an article back in the mid-90s, and Larry Kudlow here, as you can see, went to check into a drug rehabilitation treatment center to deal with his $100,000 cocaine habit that he had. This was spent per month at the time. So such is the people whose background is becoming ever more murky in the political world, it seems. Trump never ceases to surprise in terms of the type of people. But who am I to judge? I am a believer of that everyone deserves a second chance, and he's gone through rehabilitation, so fair play to the guy. But yeah, some interesting background checks that I'm sure other people would also be looking at. All right, moving on. Looking at other things, talking about Kudlow, the whole key thing here is about trade talks, and this is what's being run in the FT at the moment, because if you remember at the weekend, it was talking about the exemptions to the rules, of which the tariffs that Trump's been looking to implement were including people like Mexico, Canada, and also this kind of European element as well, as much as European has been making some kind of retaliatory noises in that respect. So Britain's also taking that same stance. Britain will seek an exemption from Trump's tariffs on steel and aluminium by citing its strong national security relationship with the US, according to Liam Fox. But the Trade Secretary emphasised that London was working with Brussels on several potential countermeasures should Washington refuse to meet that request. You know, this is actually one of the key things about being in the single market. For instance, when you're representative of an area of some 500 million people, then obviously when it comes to trying to fight a fellow trade partner like the US, then obviously you've got phenomenal amount of clout to work in unity as together as a Eurozone, whereas the UK or Great Britain individually, you know, if the US really wanted to tighten the screws, then it's a little bit more problematic, given the representation of the volume of goods is far lower on Britain alone rather than Europe as a whole. But quite interesting to see that, you know, Britain here looking to stand their ground in regards to potential also retaliation if Trump was to go ahead with these things. To give you an idea, the Shadow Trade Secretary there's giving some details. There's 32,000 steel workers in the UK, just to give you an idea. And as per the numbers, sales to the US were 350,000 tonnes, accounting for about 7% of total British steel exports as per 2017. So it is a fairly significant percentage margin of all of the exports coming out of Britain. Alright, other things to be aware of. Obviously today, come 12:30, we get Chancellor Philip Hammond. He's going to be looking to outline some further details as to the government's performance so far. The one thing to keep in mind is that we have now changed the structure, so it's the autumn budget that's key. The spring, what would have been a budget update, is now kind of a statement where he just goes over and tweaks a few of the forecasts, but no one's expecting any dramatic changes. That's to come in the budget at the end of the year. So as such, a couple things just to be aware of. the Office of Budget Responsibility, so the OBR, they're going to be outlining for the first time the Brexit divorce bill. This is going to be part of their main document that the OBR will release. So to give you a reminder, the British government has agreed to obligations of between £35 billion to £39 billion, but the final amount is obviously still yet to be defined until the framework of these negotiations is more finalised. The final bill could be as high as 75 to 25 is the kind of range that it could reach. The EU has put a number on the bill of around 60 billion euros. So that's the situation on the kind of Brexit numbers. A couple of other things though to have a look at here in a few quick charts. This is looking at the Philip Hammond might be able to get some good news. This is looking at the UK budget balance and forecast. So as you can see, the budget deficit in the current fiscal year alone may come in as much as £10 billion lower than what the OBR predicted just 4 months ago. We all are also expecting UK economic growth to maybe see a slight uptick in terms of forecasts. The OBR and the UK government have tended to err on the more pessimistic side on that front post Brexit in itself. However, it's not all sunshine and rainbows, because this is one of the key things, and this is certainly something I'm sure that the opposition party, the Labour contingent, will be jumping on. This is UK public sector weekly pay premiums relative to the private sector, and this is really quite an ugly chart, because when local governments are struggling to pay increases for millions of public sector workers remain capped well below the current rate of inflation. So this is that kind of divergence where we're in a case of negative real wage growth in this sense, and this is very much acute in the public sector. You might have read a lot of the news coverage about 4 weeks ago. Even though the budget deficit is coming down quicker than expected, if you were to look on a local authority basis, take Surrey for one, which is the richest county in our country, in England, they've got approximately £100 million shortfall in terms of their budgeting, and 9 out of 10 local councils will be over budget by year end. So on a more localised level, yeah, this is really impacting normal working life for people within this sector. Again, why there kind of explains then why there is this quite clear divide in political view at the moment present within the UK. So that's the budget situation. 12:30. In short, though, irrespective of all these details I've just spoken about, would I be expecting a big move in the pound at the back of the statement? I would say I'm about 90% sure that that's not going to happen. That's not the purpose really of today. I would say that the leanings more are toward, I'm talking about the FX sterling reaction. I think it's more to do with the ongoing Brexit noises going into this key negotiation period that's more key as a real driver of sentiment for the pound. These subtle tweaks that we're going to see amid the statement itself, I think aren't going to be meaningful enough to really cause a dramatic move in the currency. Quick look at the day ahead then, and I've already talked about why CPI is so important. That really is the key number of today. Don't forget, again, the time change in the US. So for the next 2 weeks, it's going to be 4, not 5 hours between London and New York. So at 12:30, we get the US CPI data. Yeah. So what we're looking out for here then is looking at the core year-on-year. This is kind of the main number that I want you guys to focus on. So it's expected to be unchanged from the previous, so 1.8%, but we have got a range of 1.7 to 2.2%. Now, what does that look like? So 1.8% would be the third consecutive month basically at that level. Would that change the kind of belief about the Fed getting more aggressive or hawkish to tightening policy in terms of their forward guidance? I think no. I think that's then the status quo. This kind of remains at 3 rate hikes for this year, at least for the time being. They'll still monitor incoming data, still remain relatively optimistic about economic conditions improving, but not enough to cause this immediate fear about inflation and the spiking yields on the dollar in that sense. And so now under this scenario, I'd probably be expecting a 1.8% inline reading. Well then, no reason for equities not to continue to just grind up back up to the 2800 level and beyond probably. I would say in terms of the US 10-year, if we're just looking at the chart here, there's a fairly clear double bottom that's formed in the month of March, and even if yields did rise a little bit, I think that level's still looking good to hold for the moment. Okay, so let's look at the outlying possibilities. So there is an expectation of 1.7. I think 1.7, then you start to see a continuation of dollar weakness. So both major pairs, euro dollar and cable. Euro dollar be looking out to retest the intraday highs, and that's seen from overnight, because we're not too far from that in reality. They got a double top here as well, 123.50 type area. So I'd be looking for a retest of that. And it kind of fits the narrative. If the junior Brexit minister's talking about this kind of positivity about movement in the talks, a point are going in the right direction, so that's sterling positive at least short term, and then dollar negative if inflation's weak. So you might get a retest as well of yesterday's high levels in cable on the intraday. If we get a number though, the top end range on the upside is 2.2%. If you look at 2.2% on the chart, that is pretty high. That will take us all the way back to basically February of 2017. And if we start looking at inflation here, 2.2 puts us back up in that 2016 kind of consolidation from 2.1 to 2.3%. Then that does change things quite a bit. And I think then people will start to revert back to the mentality of about 4 or 5 weeks ago, about actually irrespective if job creation is up at 313,000 and unemployment rate for the 5th consecutive month is down at 4.1% in the US, this should technically start to create the tightening of the labour force that will mean inflation is going up. And if that is present here and we take a dramatic jump from where we are at the moment, which has basically been just static at 1.7, 1.8%, we jump up to 2.2, you could have a decent move in the markets today where you get equity sell-off, you'll get yields spiking, dollar appreciation, and gold spiking to the downside. So in that situation actually could be the most market moving and create some good trading opportunity. Alright, I'm going to finish at that, and I'll let Sam come on quickly to just talk over a couple of charts, but I'll be in the room throughout the day, so any questions, please just let me know. Thanks very much, guys.
Good morning, everyone. As Ant mentioned, the focus very much is going to be on what happens at 12:30, and I would expect, just like Friday morning for the non-farm payrolls, that the build up to that release will be relatively quiet. You can see already let's have a look here at the euro. It's been relatively choppy, pushing down below the pivot and come back higher, and I'd expect sort of sideways price action before that release to occur. But in terms of the range perhaps that we are in for the day, obviously the high of yesterday almost touched this morning, low of today, yesterday's low, and then this sort of double bottom that we had from here, the 9th and the 5th, I think will certainly contain today's price action if we were to get anywhere near those lows. If we were to push above yesterday's and today's high, other than R1, I think the key level to still be aware of is going to be the low that we had here on the 8th before we had that breakdown through there. I'm just going to circle that up. This for me is the key area, and I think if we were to get up around this point, we would certainly have a sort of a strong rejection and perhaps get that push lower. But I wouldn't be expecting too much this morning, as already mentioned. For pounds here, for cable, I think it's worth having on. Let me just refresh this chart 1 second. Refresh this chart. I think it's definitely worth having on this trend line here, just using a few of the previous day's highs before we did break through yesterday morning, and then we found a bit of support on that level. But I'd be focusing on, if we were to come back down there, I would expect some support, and same from using the lows from previous days. Marks up relatively nicely as well. If we were to come back down around this area, let me just circle the point I'm really looking at. Around here, for me, I think would be a good area of support. But again, you know, it comes 12 o'clock, 12:30 for the release. Look, it could easily go through. There's nothing to say the data is just going to stop at that point. Yesterday's low, you can see nice double bottom here. Again, definitely an area to be aware of. And the highs, you can see double top, triple top with that level there. So you can see just how important the technical highs and lows have been for cable here. So I definitely would be paying a lot of interest to those points, and as with the euro, perhaps really staying out the mess that it's in now. In terms of levels to the upside from an intraday perspective, where we did find a bit of support before breaking through at 139.02, I think could be a decent sort of short-term resistance, and then, you know, might be worth just having a potential trend line on from yesterday and today's high, just sort of ideally get price action sort of squeezed in to that point. Have a look over at equities in the US, which obviously came off a bit yesterday following that sharp move to the upside on Friday, and, you know, sort of normal service has really sort of resumed, it does seem. Of course, if we were to have a strong reading or a really weak reading, you could see a further move either way. Yesterday's high, I'm just going to lower the time frame here, sort of does seem quite far away from where we are now, and I think if we were to get through there, obviously other than today's high, you have quite a few decent pullbacks yesterday, which really sort of continued the sell-off, if you like. Just going to see if we can get any sort of trend on that. So you can see we just had a couple of tests already this morning at the upper end of this sort of trend line, so I'll be focusing on that. If we were to get a breakthrough, you've got a couple of decent targets around these kind of points before we were to get to yesterday's highs. You've got R1 in there, and then obviously that high as well. In terms of levels to the downside, you've got a short-term support area here, which is, you can see, found resistance once, twice, break through, come back for the classic there. Would still be looking at that area. Ideally, perhaps for a better sort of technical trade, you'd like to see price action just sort of get squeezed in and then break either way. Definitely something I'll be focusing on there, and it probably will look quite similar. You can see here with the Nasdaq, which, I mean, look at that Friday's move, pretty incredible really, and the Dow Jones perhaps a bit more similar to the S&P in that respect of yesterday's move, just a bit more powerful. Let's just have a look. I'd get that trend line on there as well. High of yesterday evening, and the pivot looks like a very good resistance point. However, with all things considered at the moment, I would really prefer to look for a break of all of this. I think a key level to the upside, which we broke yesterday, you can see around here for the Dow Jones. Let me just mark that up. We haven't really come back to test that area, so that would be something I'd be focusing on. I'd again be looking at, let me just get this trend line on yesterday's lows up to today's, just to see if we can start to get this respected, and then obviously you can get a break either way. That would be something I'd be focusing on. But really, before the 12:30 release, I'm not sure I'd want to commit to a too big a trade, if you like. The pivot and oil look quite good together, for the pivot for oil, I should say, but we're stuck within this range between sort of 13 and 44, as you can see, and I would really prefer to see a break out of that. Again, decent sort of, let me just get the trend line back up when it's there. You can see using these previous lows just to see if we can start to get anything broken in. Let's have a look what happened yesterday. We broke through there. Okay, not the best sort of one to have on, but for oil, I think again it's a case of just sort of waiting for price to get out of this range that we're in. So right now, in terms of looking for a trade to get into, I think it's better to sort of hold off. S1 first sort of tested that for gold has held quite well. We haven't quite come up to 13.19 where we got this further push down, so I would expect a bit of resistance around that point. And if we were to get another test of S1, you've got yesterday's lows, which aren't too far away below that. Key area, I think, which I would prefer, you know, again, it does seem quite a long way away, and I think patience this morning is going to be the better way to go about it. You can see where we found a bit of support last night before breaking through Asian session. I'd expect a decent resistance level around here, or where this point was just above the pivot today. But 12:30 could obviously send price considerably higher or lower, and that, you know, along with the cash open being brought forward by an hour, which is always confusing for a week or two when it's like that. I think is just better to sort of hold off today, or any sort of trading opportunities that you see, just perhaps better to go in smaller size. From a technical point of view, S1 for the Aussie dollar looks like a good area. Let me just get the rectangle to highlight all of that. We've got it here. So you've got previous highs that we had on Friday, you've got the lows of Thursday, S1 in the mix there as well. From technical perspective, it does look pretty good to sort of contain that. And again, the R1 for yesterday, nice sort of technical point. And if we were to break through there, the highs of the 26th, not a million miles away at all. So one to keep an eye on there for Aussie dollar. We'll have a quick look over dollar yen to wrap up, which also found good resistance on this sort of double top that you see. And if we were to get a push through, you know, you've got some another key area of resistance from the beginning of March, end of Feb. Let's just lower that time frame back down. If we were to push through, there you can see the gap, the sort of the risk reward of that trade. Safer option would perhaps be looking for a pullback down to yesterday's high that we did, or yesterday morning's high that we broke through to find support this morning. R1 you have there sort of already worked perhaps. So I think again, waiting for sort of a break of this sort of range, if you like. With yesterday's high already been tested, or the high of the night, which had already been tested, I wouldn't necessarily look to be going short at this point. In fact, rather looking to see it break through for a trade to the upside. Any questions about the charts, please do get them in the chat. But if not, I would spend the morning sort of planning for any eventual outcomes for the day ahead. But if no questions, I'll catch you in the chat later on today.